Now to the U.S. economy and housing, which saw sales of previously owned homes surge in May. The pace of existing home sales increased more than 5% last month, hitting their strongest sales pace since late 2009. And as sales rise, so do prices. That prompted the chief economist for the National Association of Realtors to predict prices could surpass the peak set back in the last housing boom. But is that a healthy thing? Diana Olick reports.
Housing demand is increasing, but there are just too few homes for sale, and that is putting upward pressure on prices. The median price in May, $228,700. Compare that to the highest monthly price ever back in July of 2006, the peak of the housing boom, $230,400, just $1,700 more. The Realtors chief economist says, however, that we are not in a housing bubble.
Demand keeps it from the bubble, but demand cannot continue to rise if the prices continue to rise.
It's a tricky argument to make. It's not a bubble because there's so much demand, even though at some point buyers won't be able to afford what they want.
Right now we are in a mismatch, but it's not a condition where prices would come down because of the housing shortage. So as we have more supply, it will lead to taming in the home price growth.
So the argument goes, if home builders ramp up production and more sellers put their homes on the market, all will be well. After all, May sales beat expectations, up over 9% from a year ago, even amid those higher prices.
No, we're not in a bubble, but we are in a place where prices are going to expand. The reason why it's not a bubble as of yet is there's way too much cash in the market. People are not as leveraged up as they were 8 years ago. And so that decreases the likelihood that everything will fall apart.
So no bubble because we have lots of cash, tight credit conditions, and unbreakable demand. Nothing like the last housing bubble, except of course for those historically high prices. For Nightly Business Report, I'm Diana Olick in Washington.